afternoon, good evening, traders from across the globe. Welcome to Short-Term Trading Live with Oscar. Traders, I told you this week was going to be tricky, and it has been tricky. As you see, a little up, a little down, but something has changed, and there is a pattern that we've seen starting October last year, and it meant direction. It gave us direction. The market's plummeted, and we've been in a bear market since with this little couple of week rally that we've had. Seems to be a dead cat bounce, right? Well, this video is for trading Wednesday, June 11th, 2008. And I want to show you what the charts look like now and why they're starting to look very similar to the August, September, October, November, December area last year. And then we all know what happened towards the end of last year and the beginning of this year. Pow, we went down. As Ralph Grandin would say, pow, right in the kisser. It went straight down like someone knocked it out, the stock market. And it looks like we have that formation building again. This market is dandruff, traders, and I'm not kidding. I'm going to show you why. Let's go look at the charts right now. Let me show you what's going on here. Okay, traders, the first chart you are going to look at here is the S&P Cash Daily Bar. S&P Cash Daily Bar. Look at what's going on here. First off, we have been below the Omni Trading Academy's proprietary moving average 2 days in a row now. 2 days in a row. That's interesting. I'm one of those traders, when I see something for 3 days in a row, I know it's real. For 2 days in a row, we have been below an average that we had a very difficult time getting above, and now we have gotten back down below. Now here comes the dandruff part of this whole thing. A head and shoulders formation right here before your eyes, and we've already started to come down a little bit. Now, when you start to see head and shoulders formations, and they start to show up on multiple indices charts, the market is absolutely trying to talk to you. Back in October, November, December, January, between 07 and 08, we had many head and shoulders formations within a larger one. In fact, if you look back here, there's one sitting right here. And then we had one right next to it, and they just kept showing up, but within a much larger head and shoulders, and I'm going to go back and show you that in a moment. But the idea behind this is there is one right here, and that was a very telling formation that we seen in a bunch of indices, and we were able to call the top of this market. For you traders that have been watching my videos since last year, you go back and look at the time frames, October, November, December, and you will see me talking about head and shoulders constantly and talking about how this is absolutely very meaningful and we may be topping out here, and lo and behold, we were able to follow the markets right down. Now that's the S&P Cash chart where we are right now. Next chart I'm about to show you backs us up to that time frame in last year when we had the head and shoulders formation. So let's go look at that now. Okay, traders, the next chart you were looking at, this is August of 2007 out to December of 2007, the beginning of 2008. And look at the size of this head and shoulders formation that was in place. And within that head and shoulders, more smaller ones kept showing up. And I said, look at this. This is no joke. There are head and shoulders formations all over the map. And there's a huge head and shoulders formation with smaller ones forming inside of it. And that's going to take us down. And I talked about it and harped about it and did many videos. And down we went. This is December of 2007. You just seen where we are now in 2008. Now again, if it happens on one chart, that's one thing, but let me show you the next couple of charts here, becoming very convincing. You never know what the markets are going to give you, but if you know how to read the charts, they likely do tell you the most general direction coming next. So let's go take a look at these next couple of charts. I think you'll find this very interesting. Okay, traders, here we are, a chart of where we are today. And this is the S&P June Daily Bar. And lo and behold, look at this formation right here. Head and shoulders formation. Failure at the 200 bar moving average. Below the Omni Trading Academy's proprietary moving average. And coming out of the head and shoulders, the formation gives you a projection all the way down here, somewhere around the 1323 level. If in fact we do come out of that head and shoulders, which we did over the last 2 days, if we don't recover tomorrow, we're going to start to go down and fulfill that projection. So that's the S&P cash and the S&P June chart. Let's go look at a few more charts now and see if this is not convincing to you. Okay, traders, now we are looking at the Dow Jones chart. This is the big kahuna, right? The Dow Jones Industrial Average chart. And as you can see, there is a large head and shoulders formation. There is a shoulder, here is a head, and here is another shoulder. And look at, we are below the proprietary moving average. We are down here now. And it looks like we may make a projection on the downside. So it's very likely that we are going to try to come out of this head and shoulders on the downside here. Again, we are below very important moving averages. The head and shoulders is in place on 3, maybe 4 different indices right now. And traders, just look back here at these head and shoulders that took us down the first time around. This is just part of the right shoulder. It's got nothing to do with the whole big formation. You had little head and shoulders formations within inside the shoulders of the head and shoulders. Now you have a big head and shoulders here again. After we had a little relief rally, boy, oh boy, it's starting to look like this market has dandruff. Now, you know, I don't think the Dow theory is such that the Dow Jones Transportation Average is the leader. So that head and shoulders, if it shows up there as well as everywhere else, it's very likely a very valid pattern, right? Let's go look at that chart now and see what happens. Okay, traders, now you are looking at the leader, the Dow Jones Transportation Average Daily Bar. And yes, it had a big rally. And yes, it's above all the averages, above, unlike the other indice markets. However, this head and shoulders does exist. It is here for your eyes to see. And on top of that, we have a just about qualifiable mirror image formation right here. 2 of the 3 legs of a mirror image formation are in place. And traders, if we drop tomorrow on Wednesday, I kid you not, that between the mirror image and the head and shoulders formation, we are going to take a nosedive. Now, no one knows what's going to happen for sure, but looking at the analysis, if this market doesn't have a major relief rally tomorrow, you got some downside coming your way. Do your own homework, traders. Pull up your indice charts, look for these head and shoulders yourselves, and tell me if you don't find the same pattern that I've just showed you here. So, you've seen the charts? Traders, I kid you not, tomorrow I'm getting a bottle of head and shoulders, I'm keeping it right next to me by the trade, because I'll tell you what, I think this market has some dandruff here, and I am not joking about that. The last time we seen these patterns develop, we took a serious nosedive, and we've been reeling from that ever since. So if we cannot get a big relief rally out of this area tomorrow or the next day, we're going to see some serious downside. And you know what, traders? With the price of crude as expensive as it is in the world today, I can't even imagine the world stock market's going up. I couldn't imagine that happening, but I do not project my hopes and thoughts onto markets. I listen to the charts and I let them speak to me, and I teach every one of you Omniacs how to do that at my site. So if you'd like to know how to spot these formations for yourselves and then how to handle them once you spot them, come on down to www.livewithoscar.com, grab a membership, jump into our chat rooms, and don't trade alone, traders. Don't ever trade alone, because I'll tell you what, you spend a couple of days in the chat rooms with us, and I'll bet you never want to trade alone again. We have very astute traders in there, a lot of great technical analysis going on. I am there on live camera and microphone all day to help you traders get through these rough and tumble markets. So don't try it alone. Don't sit by yourselves when you can't figure out what's going on. Come join the ever-growing army of Omniacs that come to the site every day. And speaking of the site, on the site tomorrow, baby, we got a red Omni. Red Omni, we think this is going down. I showed you the charts. Now, here's the way to take advantage of it if, in fact, we do end up going down. Omni says to sell the ESM8 or the S&P emini. Omni says to sell it in the low to mid 1360s. We are trading 1360 as I speak in this video right now, or just getting into that area. So get your orders in and be ready. The low to mid 1360s, we're going to sell, baby. We're going to kick out some S&Ps up there. Omni's profit objective is the mid to low 1330s. I'm talking the 1330s. If they start to hit this tomorrow, it can really go. On the way down, we expect some support in the 1351 area, and then again more support in the 1343 area. And then if we break them, the low to mid 1330s, here we come. Now, will that definitely happen? Well, I don't know. What are you asking me for? Nobody knows what's going to happen for sure. But if you do your technical analysis, I think you will come up with something like this on your own. So look at the charts. Do your homework. Always place stops. Traders, a stop is your best friend, and don't ever trade without sell stops or buy stops. A protective stop will keep you out of a market that goes the wrong way against your trading idea and knocks you out so that you're not sitting there wishing that you were out of the market. You'll be out of the market. And I say this many times, I would much rather be out of a market wishing I was in than in a market praying that I was out. So make sure you put your stops in so that if you call it wrong, you get knocked out and you live to trade another day. All right, traders, anytime you want to call me, please do. 702-629-4755. I know most of you don't know this that watch me on YouTube, but I am a broker and I would love to be your broker and help you. You can open an account with us. I can watch your trading. I can be your personal coach and mentor, and we have every bit of trading for you that you could possibly want. Every commodity that's tradable, we have access to, and we will help you do the analysis in any market that you favor and make sure you get it right, or at least make sure you took a really good educated guess and make sure you had your stop in so you don't get blown out. So if you'd like for me to be your personal coach and mentor, open up an account with me. You can do that right at the site. Again, the site's address is www.livewithoscar.com. Now, I don't think I gave you the phone number a minute ago, right? Let's get the phone number to you. Call me anytime, day or night, 702-629-4755. And traders, keep sending those emails out, please. I love the interaction. I love watching your homework, looking at your emails, and making an assessment of the work that you're learning from us. So shoot the emails out to me. It's Oscar@futuresanalysts.com if you're looking for the email address. All right, traders, we discovered something about our videos. Guys, what did you want me to tell everybody about the videos? There's a way that you can watch the videos. The charts I show you on the board will come up clearer, and I believe the videos will look clearer when you watch them on YouTube. And Mikey, Bob, what do I have to do to make that happen?
Well, you can watch any of the YouTube videos in high def if you're at youtube.com/futuresanalysts, and you add this small snippet that I'm going to add at the as a graphic at the bottom of the video.
Okay.
It's at the end of any URL, and you can watch it in high def.
Gotcha. All right, traders. At the top of your browser, when you go to one of my videos, there is a URL, right? It's the name of the spot that you're at right now. We are going to put a graphic on this video right now, and it'll show you what you should put at the end of that address to put the video in high def for you so you can watch it in a much clearer fashion. We can't add the ending onto the URL. You have to add it on yourself, but from what I've seen watching it myself, it makes the videos way clearer. So hey, bravo, good fun, guys. Thank you very much. Okay, traders, again, like I told you, don't trade alone. Make sure you come down and huddle with us, Omniacs, and we'll help you get through these markets. And I'm about to get out of here because I know the markets are getting close to where I want to get into the action. So I'm going to run. Traders, remember to keep your emotions out of trading. And one of the best ways I can help you with that is to tell you to say this to yourselves over and over again, because I promise you it will really help you. And you know what that is? Stops are in. Emotions are out.
Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided. That being said, I am a 24-year seasoned trader on and off the floors. This is how I've made my living for many, many years. Good luck trading.